Each and every week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. On this week's episode, we are going to be breaking down 1431 Main Street in Paris, Kentucky, 40361. It's just outside of Lexington, kind of a smaller bedroom community. And let's analyze this thing for cash and creative and see if it's worth it. Good morning and welcome back to another episode of the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. Hey, before we jump into the video, if you could do me a solid and hit that like button down below, it helps the channel out, and I really do appreciate you for doing that. So this is a 4-bedroom, 2-bath, 1918 square foot. They don't know the year built, but looking from it, I'm going to guess it's pre-1900. Zillow is saying they're kind of spot on their price. And how many days on the market has it been? 49. All right, nothing, not horrible, but we'll see. 4-bedroom, 1.5, currently being used as a. This is perfect. It's already a rental, offering great investment opportunity with steady rental income, convenient location, blah, 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 blah. All right, so it's not telling me a ton of stuff. 4 pictures. It's got tons of parking, but they're not showing us anything on the inside of the house. Unfortunately, that is common with properties that are rented. So we're just going to have to kind of wing it, see how it goes. All right. So they're saying the price is right there. Our rents should be 1816. We'll write that down. Rent 1816. And our pricing is kind of all over the place. But this is for investors only. So, as you know, if you follow me at all, investors, we don't pay retail. We pay below retail especially on a cash deal. I will pay retail on a creative deal if the terms work out. What else we got in here? So they've been up since July. Looks like they tried to sell it or no, rent it last February for 1550. And we know what they paid for it. Not that it really matters, but it helps kind of figure some stuff out. This has been a rental for a while. Sold for 102 back in 2010. Tried selling it in 19. Tried selling it again in 21. Well, the good thing that I know about this time frame in the markets, if they weren't maxing out on their price or getting their price during those markets, then nobody was going to buy it at that. So, being that this is an investment property and investors only can buy it, I think we're going to be able to offer a good number to us. Seller may or may not take it because they're getting good cash flow. All right, so the taxes have not been reassessed since 21. So 2, 3, 4, 5. There should be up for renewal here pretty soon. So 610 from 433. I think we're going to call our property taxes about 900. I'm going to write that down before I forget. Tax 900. There again, I would rather factor high numbers and walk away from a deal than factor low numbers, buy it, and then after the deal closes, realize that, uh-oh, I made a big boo-boo. I paid too much. All right. So it doesn't look like anything is sold recently. That's all there is there. All right, homes for sale. 240, 255, 230, 255. All different style houses. 224. is this? It looks like an older house, 1940s, so not quite as old, but that's for sale for 2.25 as well. 209 to 300. 16, 125, 15, 140. Since we can't see what the inside looks like, we're gonna go with an ARV of 200,000. Again, this is a really old house. Me personally, I like really old houses. So we're gonna say our ARV or after repair value is gonna be 200,000. And then on our cash price, we're gonna offer 70% of that. Can't do math in my head. I went to public school. 200 times 70% is 140. 140 is our offer price. All right. I think we have everything we can off of Zillow and our basic information. So now we're going to jump over to the Invest Nest and analyze this for a cash deal. I'm logged into the dashboard here on the Invest Nest. This is my own personal dashboard. As you can see, my big, beautiful logo right there. If you want to try this site out, I'll have a link below. With that link, you get 50% off your first month and your first 7 days for free. Try it out. It's only like 15 bucks a month, I think, and it does include skip tracing. It's got a ton of useful tools on it. It's got like a mini CRM, but I'll break that down in a different video. But just follow along and see if you like how I'm doing this. I got our address plugged in, and let's pull it up here. I had it plugged in. 431 Main Street, Paris, Kentucky. There we go. I got to click on it. You can't push it into. All right. So estimated value is very similar to what Zillow is saying at the 223. Zillow is saying 225. Estimated mortgage is about 180, and their payments around $1,000 a month. And what else? What else? What else? Bourbon County. You know you're in Kentucky when your county is named after bourbon. This is owned by an LLC. And if they're again the skip tracing, just click that little button right there and it will pull up anything and everything they can find on that individual or LLC. Oh, so they pulled out another credit line, maybe? They probably paid this off with this. On a 5-year short-term loan. Hmm. Oh, just a credit line. That's probably a credit union or something like that. And so they owe about 178 from February, so that's probably not paid down a ton. They probably owe 175. And if our offer price is only 140, it may not work, but who knows? Maybe they put down more. This isn't like perfect science, but it's pretty accurate. All right, let's run some numbers. 1431 Main Street. All right, our purchase price is going to be that 140. Closing costs, we're going to be paying both sides. So let's factor that in at 4%. And 2 points is going to be our hard money costs. We don't know what the inside looks like, So for this purpose, we're going to just say it's beautiful inside and we don't have to do a thing. It's probably not, but 20% down on a 30-year term. And I think if we buy it down a little bit, now we'll leave it at that 704, 7.04. All right, next, our rental income. So Zillow was saying our rental income was what, 1816? Yeah. So now we're going to jump over to HUD to see what they're offering. This is the HUD website. Pretty simple, user friendly. I'll drop the link below as well. But it will show you what the max for a efficiency all the way up to a 4 bedroom will be paid for by HUD. So their max for a 3 bedroom is going to be 1583 and our 1816. So we got a fairly large discrepancy there. I think we split the difference on that and say 16. Kind of be a little bit conservative because as we saw on Zillow, it was only rented for like 1550. So let's say our rent is going to be 1600. All right. Now that we have that, jump back over here. 1600 has our property taxes built in and our insurance. I'm factoring in 125 a month, so that's 1500 a year. Management, 10%, normal across the board, doesn't matter where you're at. Utilities are going to be paid for by that tenant. Reserve or war chest. Always, please, always put aside money into that war chest for reserves. Excuse me, reserves for repairs and maintenance, vacancy, and capex. It's never a matter of if something goes wrong, it's when something goes wrong. We're dealing with real estate here, people. Come on. And we are real estate investors. We don't pay full commissions. Let's see what these numbers spit out. Not bad. $285,000 for $36,000 out of pocket. It's almost a 10% cash on cash return. Your ROI is almost 20.5%. So I think this is pretty solid. And one thing I missed last week is the rent income. It does increase by 2% per year. On average, I'm raising my rents 2.5 to 3% per year. Oh, and another great thing about the Invest Nest, it breaks down where each and every single dollar goes. So I like I guess the simplicity of it. So that's going to give us almost 300 bucks a month. They got a pretty cool chart down here that shows your returns, your cash flows, all of that fun stuff, and essentially your NOIs. So for 285, or we would get 285 on a cash deal. Now, that seller would have to take less than their current mortgage if those mortgage payment information is correct. In a perfect world, we would buy this thing subject to and just take over their existing mortgage. Really just depends on the terms. Now that we've analyzed the cash deal, let's do the fun part and jump over to my creative calculator and analyze the creative deal. This is my creative calculator. You can get it off my website, christhompsonteam.com. The link will be below. It's a free download on there, and there's a bunch of other useful tools that you may or may not find useful, but try them out. They're all free. Download them, enjoy them, love them. You can also book a call with me on there, and if you want to learn creative, I would love to jump on a call or a Zoom with you to help you close more deals. All right, our ARV we said was only 200. We know our 140 offer was low. So creatively, let's throw in let's take a gamble and say, hey, we'll give you that 200. But we're going to say that the interest was already built into that. Because most of the time when you're getting seller finance, they want a 5 or 10 year balloon. So I do have a strategy that I'm able to get this magic number accepted, and it's pretty sweet. I'm not gonna lie, because every single payment is all principal pay down. So to find out our PITI, or principal, interest, taxes, and insurance, I'm going to jump over to bank rate. Now on bank rate, we are going to plug this in. And I only want to put 5% down. My rate is going to be 0. Zip code over there is 40361. And our insurance, again, we want to put 125. Property taxes, 43. Number high over here, 43. All right. $696 a month for principal, interest, taxes, and insurance. Pretty solid number. I can't complain there. Now we jump over and plug this back in, 696, 696. We said our potential rents were 1,600. Whoa, gross cash flow of $904 a month. 240 a month go into our war chest, 160 for management, and that is a net cash flow of 504. That is a beautiful thing. Now we have to, I really like this ROI too. Just based on this, we'd have our money back within under 2 years, but we haven't finished filling this part out yet. So our cash to the seller, I believe that was 10,000. Yes, 10,000. The agent, I think we got to give them like at least 1%. Assignment fees, we're not working with any wholesalers, so that's going to stay 0. Our closing cost at 4%. Cost of renos, we said we were going to leave blank, but the likelihood is that's probably going to go higher. Holding cost is 2 months of this PITI, and a good TC or transaction coordinator. Really just somebody that makes sure your paperwork is done correctly. I highly recommend them. It's going to be about $1,200. I would say that's average. I've seen some lower, I've seen some higher, and I've seen even more, much higher. So all in, within 3 years, not factoring in any price gaps, you can have your 22.5 back. So on a creative deal, we're looking at just say $23,000 out of pocket, versus our cash deal, which was 35, almost $36,000 out of pocket for 285 versus 500. So it's less money out of pocket, and it's a whole lot better on uh, on the creative side of things. If you have made it this far in the video and you found some value, hit that like button down below. It really helps the channel out, and I do appreciate you for doing that. What are your thoughts at 1431 Main Street in Paris, Kentucky, just outside of Louisville? Or excuse me, not Louisville, Lexington. My bad. What are your thoughts on the cash side and the creative side? I think they both work. Obviously, the seller has to accept the terms of either cash or creative, but I think both of them have good cash flow. And if we could see the inside of the property, we could analyze it a little bit differently, maybe a little better. Either way, I would love to know your thoughts. Drop them in the comments down below. And again, hit that like button for me. That's going to do it for this episode here in the Corner Barn. Thanks for tuning in to the Weekly Deal Analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.